Good evening, good evening. Getting ready to get started. Well, let's see what happens. Oops, we're gonna change this real quick. Change that. Come on. Come on, come on, now touch me, baby. 301 cards. How's it going? Luis, JC Jack, Bo joined us. Bo. What's happening there, Bo? Let's get the ball rolling. Let's get the ball rolling. That's funny. Tyler Alexander. What's happening? Rude Dude. What's happening there, Rude Dude? S-A-N-H. Not even a hi, hello, how you doing? Just S-A-N-H. S-A-N-H. Never heard of it. That's going to be a hell no. Jim. Oh, Jim, what's happening? Domingo. John Hilton, what's happening? Bama Redneck. Yo. Chevrolet over here on YouTube. Ooh, this ought to be interesting. I'm kind of curious how it's going to work out. Jim Walters. Alrighty, 7-Eleven. Debbie, nice to see you. First time I had a girl named Debbie here. All right. Sup, James? What's happening, Austin? Some of the comments in the live are going to be filtered to protect against. Ooh, do you remember that? The story you're about to see is true. The names have been changed to protect the innocent. Dum. What was that? 1 Adam 12? What was that? That was Dragnet. The story you're about to see is true. The names have been changed to protect the innocent. Stifler's mom. What's happening, Stifler's mom? I remember that movie. I remember when I first saw Stifler's mom. I was like, holy shit. I don't remember. Was it? Yeah, there was. There was a couple of moms in high school that were, Oh, God, that's horrible. All right. Let's get the ball rolling. It is Sunday night. We're starting week number, I believe it's 34. I'm going to actually have to count. Isn't that sad? All right. So, July is the first week of the third quarter. So that's 26, 27, 28, 29, 30. 31, 32, 33, 34. 34. So we're going to start week number 35. Wow, week 35 starts tomorrow. Week 35 for the year starts tomorrow. What does that mean? Well, we're already way past half the year. Okay? We're, holy shit, we're almost 3/4 of the way, 2/3 of the way through the third quarter. Because the third quarter ends September 31st, which is only, we got 1 week left of August, and we got 4 weeks of September. So that's 5 weeks away. 5 weeks until the fourth quarter. That's craziness. Craziness from all different directions. Fourth quarter's right around the corner. Well, I want to apologize now. As you can see, I got this black stripe going down my monitor, so I'm going to need a new screen. So I'm looking to find out what is going to, what's going to be a good one to get. So I'll be doing that over the next week or so. So hopefully, sometime next week we'll have a new screen that doesn't have that black line on it. Let's see if I can get something in here to change the trajectory of this camera. Perfect. Outstanding. Well, let's get started, see where we are, see where we're going. All right, we're going to go take a look at the list. Uh-oh. Shit, where the hell is my list? There it is. Yeah, weird, can't find my list. Hey, Lucky Larry's here. Lucky Larry. And here we go. We got our list from last night. Now remember, the new week starts tomorrow. Okay, so that being said, we got a whole new set of companies coming on board tomorrow. Let's take a look at a couple of them. Now, like I said, we are into a week, the last week. Is that right? Oh, yeah, wait a second. The last week of the last week of August. So what do we have? We have 3M, Johnson & Johnson, KeyBank, Baxter, eBay, Corning, Heinz, Newmont, and Whirlpool. So let's take a look at some of them, see what they look like. All right. William Lee, how is it going? Wonderful, wonderful. All right, so the first one I'm going to take a look at is going to be 3M. Why the hell not? We like 3M. Let's get out of here. Let's get onto some 3M. 1, 2, 3M. Here we go. Very first thing I always want to see anytime I look at a stock is going to be the high of the year. And that just so happens to be Friday. Well, our bottom was way back in October of last year. Right? So nice little uptrend, big gap here, shoots up, and then just keeps on going. So I'm basically going to say no to 3M today because 3M, do you avoid earnings week? Example, Dell this week. Yes, Rich, I do not pay attention. Sorry, I do not pay attention to earnings. Okay, let's take a look at Dell just because you brought it up. First thing, before I do anything else, here's the high, here's the low. Nice run up, pulls back, and actually shoots up again and seems to be stalling right here the last week. So let's take a closer look at it. Fine. A year ago today, we were at 56.04. Right here, 56.04. Look, can't see me. Right here. Way over here. Okay, a year ago. Shoots up, finds the high. Right there, 179. That was the end of May. From there, we get your pullback. Okay, Mike wants to take a look at spiders, SPY. I don't know why it doesn't fit into this category. Bobo, or Bodo, what's happening? Doc, what's up there, Mr. Doc? Okay, so the high, 178, she pulls back. And take a look at the last 30 days, the 25th. Here we go, last 30 days. 30 days ago today, Dell is at the 30-day high. She drops, retraces, now she's going sideways. And I hate that word sideways, especially when you're talking about a stock, because stocks don't go sideways. They go up and they go down. That's it. Okay? Did you look at Apache Energy? Nope. That is 4th on the list today. All right, we got our list from yesterday. We're right here. 4th on the list is going to be Apache. We'll look at that in a little bit. Right now, somebody mentioned something about Dell, so I'm going to take a quick gander at Dell. Now, I like Dell. The current price, $112.45. The 113s are going for $630, and the 112s are going for $670. Well, I'm going to say yes to both of those. Hold on a second. I'm going to write. Yep, I actually have Dell written down and circled. Okay. Dell, Mara, CBX, Siri. Well, I like Dell. Let's take a look at seasonality. Well, right now it's just sitting at 112. Okay, so the 112s are going for 670. That's a big fat chunk. That's my calculator. Okay, at the 670, $6.70 per share, and I'm buying it at 112.45. Give me a grand total of 6%. That's crazy. Cool beans. All right, we're gonna look at that in a little bit. So let's keep on keeping on. Now, seasonality. Just give us an idea, what does this thing normally do this time of year? Well, if you're not familiar with seasonality chart, let me just go this side. So my far left is January 1st. My far right is Friday, okay, which was the 25th. This is where we are right now. The blue line represents the movement for this year. The red line represents the movement for the past 10 years average movement, 2014, 2015, 16, 17, 18, all the way up to 2024. Last 10 years of average movement. This is the area I want to look at right here. The last couple of weeks of August. Well, that's where we are. We're in the last week of August. Okay, so for the last 2 weeks of August, it looks as if she's going to dip a little bit, then recover and go up ever so slightly. Well, it is what it is. Let's take a look. What's your favorite stock pattern? Double bottom, wedge. My favorite pattern is a 30-day bottom after a 30-day top. I'm not quite sure exactly what you call that. Let's get back to where we were. That was still. All right, let's get back to my list. My list, PBR. We looked at PBR last night. Let's go over it really quickly. PBR. Now, we mentioned something about PBR being a, what is that, a Mexican, a South American oil company. Well, Yahoo Finance. PBR. Now we're going over to Yahoo Finance to see what kind of dividends this company's been paying. Yeah, that black line is really bad. I got to get rid of that thing. Well, we're just going to have to deal with it today. So PBR, I want to look at historical data. And then I want to take a look at the dividends and what the dividends look like and how often have they increased their dividends. Okay, the maximum amount. All right, I'm looking at them. They are not looking that great, but they are there. At least they're there. There's some companies that don't have dividends. All right, let's take a look at some of these numbers. You ready? Where can we find your dividend calendar? Well, my dividend calendar is on right here. Okay, here's the dividend calendar that I use. Now, you can use any EX dividend calendar. You just go to Google and you put in the Google search, or you can put it into Bing or whatever search engine that you use. EX dividend calendar, and whatever pops up, whatever you like. I particularly like the one that's attached to the trading platform in which I use. The trading platform which I use has a dividend calendar. It also has a lot of other attributes to it. It allows me to search all the information I want, all the fundamentals. It allows me to search historical patterns. It allows me to search different, what do you call those things? I already said fundamentals. Anyway, I like the one that's attached to Think or Swim, which is the trading platform in which I use. So now we're looking, let's stay focused on PBR. We'll take a look at the dividends in which PBR has been paying. Oh, one that started out with 30 cents and they cut it to 2 cents. I'm not quite sure what that means. Hello, sir, BK. Pissed in your cereal. What a lovely picture that one's painting. If you use Qualtrim, you can see whether dividends are growing year over year or not. All right, well, pissed in your cereal, here's an idea. Well, let's say we just stick with the Dividend Kings. Dividend Kings is 5 decades of increased dividends. Dividend Aristocrats and Dividend Champions both are 25 years of increased dividends. Those look pretty good to me. And then you have the Dividend Challengers or the Dividend Contenders. Okay, just by going into the list, and you can find that list on Google also. Dividend Kings list 2024. Dividend Aristocrats 2024. Poseidon's Last Molar, how are you doing today? TradingView also has a dividend calendar. Okay, I don't know who TradingView is. I can't really help you out with that. I'm not quite sure at this point in my life I want to change trading platforms because I'm not quite sure what that TradingView actually has and what it doesn't have, and then learning something new. Hello, hello. S2 Ray. Esther Ray. Okay, whatever. Hello, hello. All right. Let's continue taking a look at the dividends from PBR. Went from 30 cents to 2 cents to 23 to 6 to 11 to 25, 19, 26, 21, 21, 27, 47, 23, 17, 28, 29, 18, 12, 80, 29, 22, 28, 23, 16, 24, 19, 15, 25. all over the place. Well, look at this. And then in 2018, dropped to 3-cent dividend, and then a 5-cent dividend, then a 3-cent dividend, and a 5-cent dividend, 9 cents, 29, a buck 30, 2.59 and 22. Well, now we're at 75, 47, 53, 43, 60. Yeah, no, they're all over the place. Uh-oh. Uh-oh. What do you think about ICT? What do I think about ICT? Well, ICT doesn't have any options at all, and the chart is having a hard time finding it. So I'm going to say no to ICT. A couple of reasons. Number one, I've never heard of them. Number two, they don't have any options. So if they don't have any options, what good are they going to do me? Yeah, this is easier to read in a graph on a qual trim. That's all I'm saying. I have no idea what qual trim is. Snowflake is not a dividend stock, so he's going to not be interested. Bodo, come on, you didn't let me say hell no. Austin, what do I think of ICT? No. ICT doesn't have what we're looking for. As a matter of fact, it doesn't even pop up. So if it doesn't pop up, okay, see, it's not even popping up. That doesn't have any options, so it's going to be a no. All right, Warren, you want to take a look at snow? Why? That's my question. Why? Why would you show up to a dividend stock channel asking about a company that doesn't have any dividends? There are no dividends in the selected time period. So Snow, S-N-O-W, has no dividends. So why are we looking at it? Alibaba, Neil. It's a website. Oh, hold on a second. Qualtrim is a website. Qualtrim, smart stock analysis. Okay. Oh, I got to pay for it. Interesting. Yeah, this is definitely not a quick thing. All right, I'll have to take a look at that another day. Not today. All right, can you show the unrealized losses for Macy's? Unrealized losses for Macy's. I'm not 100% sure what you mean by the unrealized losses for Macy's. Nope. Unrealized losses for Macy's. I'm not quite sure what you mean by that. All right, well, here's Macy's right here. And my profit and loss year to date on Macy's is $18,000 in this particular account. So let's take a look at the other one. Market watch account statement. Macy's. Macy's. Okay, there's no losses on Macy's in this account either. That's all profit on Macy's. Let's go back and try another one. Oh, wait a minute, right there. Macy's. Yeah, there's no losses on Macy's either. $18,000 profit. Well, I actually still have Macy's in this account, so that's why that's showing right there. So I have no idea what you mean. Hakuna Matata. How are you doing over there? So, Daniel family. Okay. All right. It's a website, blah, blah, blah. Can I show the unrealized losses for Macy's? I don't have any unrealized losses for Macy's. I'm sorry about that. Okay, I know you wanted me to lose, but, you know, hey, it is what it is. See, Macy's at the moment, I still have it. And, okay, unrealized. That could be it right there. I don't know. Is that it? Negative 3,500 on Macy's at this moment in time. Well, I still own it. So, yeah, it's a loss on paper. But I don't plan on taking that loss. I actually plan on taking that. All right, where's my trade on this one? 1780. So I'm into Macy's at 1780 in this particular account. So I'm not quite sure what he means by unrealized losses. Okay, here's Macy's right here. High 30 days ago, 2050. Bottoms down here, 1450. Shoots up to 17, drops back down to 15. Now we're at 16. Okay, I just so happen to be into Macy's at 17. So hypothetically speaking, my losses is $2 per share, which is 3,500. But I have no intention on selling it. So it's not a loss yet. But, you know, it is what it is. Let's go back to where we were. All right. Wow, I only have 4 positions. Okay, cool. That works. So there's no okay, I had $3,500 unrealized loss in Macy's at the moment in one of my accounts. Now I have no intention on selling it whatsoever, so it's not gonna do that. I think there's a huge upside potential. Warrior, what are you talking about? What's Warrior talking about? Anyone know? All right, Francito. Snow is on Warren Buffett's list. Cool beans. So Macy's might be Xmas builds. I have no idea what that means either. I am a Snowflake shareholder. I've lost money on it so far. Bodo, I can't help you out with that. I don't look at Snowflake because it's not quite, doesn't fit my parameters. Hey, James, I know, Hey, James, I know you don't like monthlies, and I agree with that because you don't want to sit and wait a whole month. No, I don't. But despite that, how much can you usually get premium percentage in a general on a monthly options? Are we talking 1 to 4%? Well, that's a good question, Hakuna. Let's go take a look at a few. Let's take a look at a few's favorites. Let's take a look at O, because a lot of people like O. I don't. O currently at 61 at the moment. So here we go. Snow, all right, O, which is realty income, is currently sitting at 61.28. The $60 is going for 155, but I'm losing $1.28 right off the top. Okay, so if I'm losing $1.28 right off the top, so 28 from my freaking calculator for this one, damn it. Clear. All right, so if I buy the stock at 61.28, that's the current price. 61.28. Now, let's try that one more time. 61.28. All right, there we go. 61.28. That's the current purchase price right there. Now, if I sell the $60 strike price, I'm getting 155. Okay. So I'm going to take 155. I'm going to add it to the $60 strike price. So effectively, my sale price is going to be $61.55. Now, I want to subtract that from the 61.28. 61.28. 28. That means I'm walking away with 27 cents. Hakuna, you seeing this? Okay. If I'm buying it at the current stock price, 61.28, and I sell the 60s, I'm getting 30. I'm getting a $1.55. Well, I'm losing a $1.28 right away. Well, that means I'm only walking away with 27 cents. I'll be better off going with the 62.50 for 30 cents. Basically the same thing. But here's the thing. Okay, I'm walking away with 27 cents per share. Now, I get to divide that by the purchase price, the 60, because I already subtracted that. So I'm not even making a 0.5% for the month. Now I got to divide that by 4. Okay, now I'm getting 0.1% for the week. That's horrible. Okay, that's one of the reasons I don't like monthlies. All right, so I need another monthly to go off of. GPC. GPC, great company. All right, GPC's at 142. Okay, GPC's at 142 at the moment. The closest strike price is going to be the 140. I lose 287. Damn it. Gonna make me get that damn calculator out again. Clear that. All right, so the 142 and the 420. 142. Clear. 144.20. All right, that's what I'm walking away with. 144.20. Well, now I got to subtract it from the purchase price. Subtract it from the purchase price, 142.87. So my profit on here is 133. Okay, so 133 divided by 140. It's going to give me not even 1% for the month. Hakuna, 1% for the month. So I got to hold it for 4 weeks. I got to divide that by 4. That's that's less than 0.25% per week. So you guys got to give me another monthly optional stocks to see what it looks. See what it looks like. You can check dividends year by year. It's good though. Yeah, okay. Alrighty. More questions. Snow is a short-term upside opportunity. Agree or disagree? All right, snow. S-N-O-W. All right, so we're taking a look at snow. Not something I would invest in, but I'm just going to answer a question from Mr. Warrior. The high of the year was back here at 240. That was back in February. You get a big drop here, sideways, another big drop, sideways again, another big drop. Here's the low of the year. She jumped up, another drop here. Now we're at 115. I have no idea whatsoever what snow does. No clue. Okay? Now, if I have no clue what they do, I cannot give you any idea whatsoever where it's going to go. Now, where does it normally go this time of year? And for that, we look at the seasonality chart. Now, if you don't know much about the seasonality chart, it's January 1st all the way here to the left, and here to the right is December 31st. So, a year ago, currently, wait a minute, January 1st, December 31st. The blue line represents where we are right now, right here. This is what the stock normally does. So usually the stock has a tendency to jump up and peak in the middle of September. That's what it looks like, hypothetically speaking. Okay? So look at this little drop here. This little drop here coincides with the drop right here. Okay? Same drop, shoots up. Hypothetically speaking, that's what it should do. Is that what it's going to do? Don't know. But here's where we are right now. Okay, based on historical performance only. Okay, that's last year, the year before, the year before, the year before. For the next, right until the middle of, the first week of September. So this week, next week, and then it should go up. Hypothetically speaking, based on historical performance. Why do you trade Mara when it has no dividends? Code Blue Clips. Well, why do I trade Mara? Every once in a while, you're going to find a stock that I do bend the rules for a little bit. What is the most you have seen that you can get on a monthly option? I seen 4% once. I seen, yeah, about 4% on month. I just don't like monthlies because not only are the premiums not as good when you accumulate them together, it's trying to figure out where is it going to be in the next 3 to 4 weeks. I have a difficult enough time trying to figure out where it's going to be in the next 5 to 10 days. You want me to go 4 to 5 weeks out? It just gets a little bit more difficult. So let's change this for a little bit. Go back to GPC. Okay, here's where GPC is at the moment. Here's your high, here's your low, here's where it was a year ago, here's where it is now, 142. Now, if I zoom into it, take a look at the last 90 days. The last 90 days are right about here. So here's the last 3 months. Okay, last 3 months. Here's your high, here's your low, that's where it was, this is where it is now. Okay, 142, basically 3 months ago was at 142. Down, up, down, up, down, up, down, up. Well, that's where she is now. Great. Let's look at the last 30 days. Okay, here's the last 30 days for GPC. The high, the low, where was it, where is it? Okay, your 30-day bottom is way over here. She shoots up, comes down, goes back up again. Great. Now, I can give you a good idea where it might be by next Friday. Well, it kind of looks like Monday would be a deciding factor. Is she going to continue up because of the upward trend? Or is this the high and she's coming back down? Well, that's 1 week. Monday should give us a good idea. But where's it going to be in 4 weeks? Okay, this is 4 weeks right here. Look at what she did. Up, down, up. Okay, so the next 4 weeks, where's it going to go? Up, down, up again, hypothetically speaking. So I have no clue where it's going to be in 4 weeks, but that's what you have to do with a monthly optionable stock. Where is it going to be in a month? I have no idea. I have a hard enough time trying to figure out where it's going to be next week. All right. Not a loss until you never sell ever. Yep. Remember the rules. Okay, who was that again? Banal family. How do we pronounce it? Dababna family. Okay. Remember the rules again. Rule number 1 is never buy something you do not understand or you do not want to hold on to. Always go into a stock as if you're going to buy it and hold it for the long term. That's my philosophy. What you plan on doing, it's totally up to you. Okay, I go in as if I'm going to buy it and hold on to it. Now, I sell a covered call, a weekly covered call. If it hits my target, great. If not, I'll keep holding on to it, and I'll sell a covered call every single week until it hits my target. Because I got so many stocks that I like, I cannot afford to buy every single stock that I like. And I have no desire to buy a stock and hold on to it unless it's going to give me a consistent 1% every week. And there aren't very many that do that. Macy's is one, Nordstrom's is another, that continually give me 1% every single week. Mog, what do I do if I only have a small amount of capital? Oh yeah, that's a little tough one. Now, don't get me wrong, because everybody's got to start somewhere. Now, when I first started, I had I think it was 12 or 17,000. I took out a mortgage. I took out a second mortgage on my house, and I used that money. Yeah, that was not a bright idea, but I did it anyway. There's something that's called dividend capturing. Now, let me just explain to you dividend capturing relatively quick, because I don't really want to go too much into it. Now, dividend capturing, if you do not know what dividend capturing is, what you're doing is you're buying a stock just to collect the dividend. Once you collect that dividend, you sell and move on to the next company. Well, the funny thing about that, these little green dots right here represent the EX date, which is the dividend date. Okay, Baxter, eBay, Corning, Whirlpool, Heinz Ketchup, Walmart, Emerson, Hershey's, blah, 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 all those companies. If I want to do dividend capturing, I would buy the stock 10 days or 2 weeks before the EX date. So Johnson & Johnson's right here on the 27th. So if I wanted to get Johnson & Johnson's dividend, I would buy it 2 weeks before on a Monday, on the 12th. All right? So let's do a quick example. Let's take Chevron. Okay, Chevron on the 19th. 163. Now, if I like Chevron on the 19th at 163, I want to buy it on the 4th. All right, so let's do this. CVX on the 4th, which would be, there is no, wait a minute, is that right? Okay, August 2024, the 19th, which was last Monday, so the 5th, okay, the 5th. Okay, so here's the 5th right here. Now, if I bought Chevron, remember, Chevron is right here. This is definitely not going to work, this screen. Okay, so here's Chevron right here on the 19th, right? The dividend for Chevron is 163. Now, if I buy it on the 5th, at the beginning of the day, which would be the opening price of the day. Okay, so the opening price of the day on the 5th of August. So let's take a look at what that was. Okay, pay attention to these numbers up over here. Here's the date, the opening, the high, the low, the close, the range, the volume, so on and so forth. So if the 5th is right here, the opening price of the day is 145.52. All right, let's get my calculator. Clear. 145.52. Okay, that's the opening price of the day on Monday. See it right there, Monday the 5th. The 5th opening price, 145.52. Now, the dividend, we already talked, was 163. So I want to add the dividend to that. 163. Now, I have an exit target. Exit target of 147.15. How many days does it take to get to 147.15? Well, let's find out. All right. We're going to keep an eye on this number right here. 147, wait, what was it? 145, 146, 147, yeah, 147.15. All right, so here, 146, 147.15. So 1, 2, 3, 4, 5, 6, 7, 8 days. 8 days before you hit your target. Okay, it's before the dividend though. Because remember, the dividend was on the 19th. The 19th was right here. So the stock has a tendency to go up before the dividend date. That's what I would do. That's what my grandson does. Now my grandson started out with 50 bucks. 50 bucks is not a lot. But you take 50 bucks and you separate it into 5 different companies. Well, it's $10, $10, and $10. So what's 1% of 10 bucks? Well, that's only 10 cents. And he uses, what do you call that? Robinhood. So there's no fees. So $10 into this company, $10 into that company, $10. Now you want to find a trading platform that allows you what is called fractional shares. Okay, so if you like Chevron and it's at 147, well, $10 on a $147 stock is not that much. But the dividend's coming up. When that dividend comes up, you get a portion of that because you own a portion of it. Or you get a portion of the run-up, okay? And then you sell it for your little profit, and then you take that and you move on to the next company. But the thing is, look, you have all these companies to choose from. Apple, ConocoPhillips, PPG, US Steel, Clorox, Kroger, ExxonMobil, Emerson Electric, Hershey's, Walmart, Ford, Intel, Kinder Morgan. There's a lot of great companies. Dividend capturing, yeah, it's going to be a lot slower, but what are you going to be doing in the next 15, 20 years anyway? I mean, think about it. If you're consistently increasing, yeah, it only takes a few minutes, but, you know, it's one of those things. You have to do something with your money. You have to put it somewhere. Unless you can figure out a better place to put it to get a better return, fine. But until then, I like the stock market, and the reason I like it is I love my brothers and sisters. I love my neighbors. Okay, I love the guy down the street. You know, the guy down the street over here, he works at Exxon. The guy down over here, he works at Xerox. The guy over here, he works at Mobil. You know, people all over, your neighbors, they work at these big companies. I like supporting the U.S. economy. It's just that simple for me. All right, let's keep going to some more of these questions. Can you walk us through what actions you will take on Macy's while you're underwater? Wow, that kind of hurts. Macy's. So I told you that I do have Macy's. And I currently have Macy's at 17, oh, my cost right there. Right, here's my cost for Macy's, $17.49 per share. Okay, great. Well, let's take a look at what the options look like for Macy's. Okay, so currently the stock price is right here. Yeah. All right. So here's the stock price here at $15.96. The 17 is right there, and it could very well see the 17 by the end of the week. So the 17 is only going for 5 cents a share. Am I really losing? Not really. Let me bring you back to my cow analogy. Now, if I have a cow and a cow gives me a gallon of milk every week, great, wonderful. That's what I'm looking for. So what happens if certain things happen in the field, a little bit of a drought, a little bit of this, a little bit of that. Now all of a sudden the cow's only giving me a half a gallon of milk, or maybe a quart. Do I get rid of it? No. Remember rule 1, never buy something you do not want to hold long term. Well, I have no problem holding on to Macy's. Rule number 2, never sell at a loss. I have no intention whatsoever of selling Macy's. Now, if you take a look at my historical performance, which is right here, okay, let's go back all the way to January. All right, week number 1, Macy's, General Motors, Ford, CVS. Week number 2, Ford, Lowe's, Clorox, General Motors, Macy's. Week number 3, Macy's, Ford, Capital One, blah, blah, blah. Week number 4, Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. Week number 9, Macy's. Week number 10, Macy's. Week number 11, oh, I don't have Macy's. Must have sold it. Okay, keep going. Week 12, nope. Week 13, nope. Week 14, Macy's again. Week 15, Macy's again. Week 16, Macy's again. Macy's again. Macy's again. Macy's again. No, no Macy's. Macy's again. Nope. Sold it. Nope. 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 Macy's again. What week is that? Week 28. Week 29, Macy's. Nope. All right, now I haven't finished these weeks right here. That's for the last couple of weeks. I haven't quite finished that yet. But needless to say, I have no problem whatsoever buying Macy's, holding on to Macy's, because I buy it, I sell it. I buy it, I sell it. I buy it, I sell it. It continuously. It's a not a roller coaster, a merry-go-round. Goes round and round and round. I jump in, I buy Macy's. I profit from it, great. I buy it again, I profit from it, I buy it again, I profit from it, over and over and over again. It's not a loss until you take it, and I have no intention whatsoever of taking a loss on Macy's. All right, cold blue. Since you are down on Macy's and your average is 17, the premium this week is probably less than 1/10%. I would say 5 cents. What is 5 cents? On a $17 stock? 0.05 divide 17 counts a grand total of 0.29. So that's 0.3. That's 1/3%. All right, 1/3%. It's better than nothing. Do you have a video showing your exact setup? Yes, I do, Tasha. It is, believe it or not. Holy cow, where the hell is it? See if I can find it. Intro video, review first book, 10 to 20 checks, dividends, steroids. That was not available anymore. Wow. Trading with dividends. Setting up your trading account. Yep, I made it private. Okay, it's only for people who are actually there. Managing your first trade, simplified chart readings, maintaining and correcting a position, blah, blah, blah. All kinds of nice, neat, fun stuff there. Anyway, yeah, there is a video. I'll have to find it somewhere. Hey, James and everyone. Amy, how are you doing today? Bobo, check out CME Group. And it's monthly. CME. CME. All right, well, CME is a monthly. Okay. So at 207, we look at the 200s are going for 740. Okay, so take a look at this. If I actually buy CME Group at 207, I could sell the 200s, bring in 740. If I lose 9 cents at the top, actually $7.09 at the top. So I'm walking away with 31 cents. 31 cents on a $200 stock. It should be a $2 premium on a weekly. So a monthly, it should be an $8 premium. But no, no. See, monthlies just don't work. But thanks for that. Oh, Zytos, yep. You look good, boss. Thanks, Joey. Good luck the coming week. Thank you. Sage, James, you only do call options, right? Yes. Visa, Amy wants to take a look at Visa. I should actually write Visa down there because we're going by the chart when it came on. QCOM. We'll take a look at QCOM also. Let's keep on going. 47 questions. Holy cow. Would you buy more Rio Tinto or healthcare? Neither one of those, Michael. Seriously, I haven't heard about either one of those. The thing is, Michael, I don't know what you do for a living. Seriously, I don't. Okay, so I know absolutely nothing about you. Number one, I never heard of Rio Tinto. Number two, Healthcare Realty Trust, never heard of them either. Okay, I'm, let's say, a unicorn in a sea of donkeys. I don't know how you want to describe it. But anyway, think of it this way. I only invest with what I know. Okay, now I grew up in the 60s, 70s, and 80s. So certain companies I know right off the top of my head. Okay, I know who Chevron is, UPS, Archer Daniels, Aflac, Target, Walgreens, Baxter Electric, Corning, Johnson & Johnson, Key-Bake, 3M, Walmart, Hershey's, Emerson Electric. I know who they are. I know what they do. I've never heard of Rio Tinto. I've never heard of Healthcare Realty Trust. So I don't ever invest in something I do not know or do not understand. It just doesn't make any sense to me. All right? If you don't understand it, if you don't know what they do, don't buy it. That's rule number one. Never buy something you do not understand or you do not want to own. Okay, I don't want to own Rio Tinto. I have no idea who they are. I have no idea what they do. No idea of their historical performance. Let's take a gander. Whoops. Let's get out of there. Rio Tinto. Whoops. Well, number one, it's a monthly. That's a no right there. Didn't we just went through a couple of examples showing how monthlies just don't pay the same? Okay? It'd have to give a 4 or 5% premium on a weekly basis to make it decent. Well, right now, the 63 is going for $1.80. Okay, the 62.50. So I'm losing 63 cents off of that $1.80. So I'm walking away with maybe 2%. Maybe 2%. But I got to carry it for 4 weeks. That's 0.5% a week. 0.5% a week is only 24% a year. Yeah, no thank you. Sorry. Healthcare Realty Trust. Healthcare Realty, HR. That's another monthly. Again, no. The current price was at $18.15. Yeah, the 1755s are going. The 1750s are going 55 cents. Yeah, the numbers just don't work. Okay. Sage, yeah, he does not sell puts. So he always buys equity rather than being exercised. Okay. Visa. Did we already? Oh, Visa's on the list. We're gonna take a look at Visa. Lancome. Oh, so I want to take a Lancome. L-A-N-C. L-A-N-C. We'll take a look at that. Next on the list that we have written down, 86, you're here early, dude. Way to go. Is RSI the best indicator? Wow, you want to talk about indicators? Holy shit. Indicators. Let's go over the charts. Let's go studies. Let's add a quick study. Look at all of them. Alpha studies, bearish, bullish, candlestick patterns, bearish only, candlestick patterns, crossovers. Cycle studies, daily studies, David Elliott studies, John F. Elver studies, LBH studies, blah, 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 blah. And that's just one. Hold on, because it gets a little worse. Watch this. You click on that, and there's a whole bunch pops up. More pops up. Look at all those. Let's go. There's way too many studies to tell you which one is best and which one's not best. Okay, RSI, yeah, it's an interesting one. Right? Is Kohl's on your list for this week? KSS. Well, let me see. Yep, I have Kohl's right here. So Kohl's is on my list this week. I'm into it at 23.23. Well, take a look at that. I'm into it at 23.23, and 23 is way up here. Oh, where's the stock? Well, the stock's way down here now. Okay, but I own it at 23.23. So what do I plan on doing? Well, it's down 16% at the moment. Do I really care? Not really. So what do I plan on doing? Well, considering it's here at the moment, more than likely I'm going to sell the 21s, which are going, that can't be right. The 21s going for 75 cents. The 2150s are going for 59. I might go with the 2150s. It's still giving me 2%. Now, I like Kohl's. I have no intention on whatsoever selling Kohl's. Even though my personal Kohl's is down 16%. I'm still going to sell the 20s. No, not the 20s. 21s. And that's going to bring me in 75 cents per share. Right there. 75 cents per share. Right there. Or is it 21s right here? Okay, so here's where it is now. Okay, all this blue up here is in the money. All this black down here is out at the money. So I'm going 3 strikes out of the money. I'm getting 75 cents, which is more than 2% of my purchase price. Because the purchase price never changes. Darth Vader. Uh-oh, I missed all these questions. VTDD. Simone is here. Uh-oh, I'm missing all these questions. You guys keep going a little too fast for me. Is there a spreadsheet to track my dividends and calls? Well, actually, Larissa, if you join the morning trading group, there are a couple of spreadsheets that they do pass around for following, your buys and sells and your what do you call it, your profits and whatnot. I don't use any of those. I just take a look at, where I bought it at, what I'm selling it at. I'm horrible at tracking. Let's go back to where I was. Okay, yeah, so they have that on the, what do you call it? The morning trading group, and then there is a Discord where everybody shares lots of information. Yeah, they have spreadsheets there. Great. Inspire me more. James, should I track my covered calls for tax purposes, or does Think or Swim do it for me? That's a good question. Now, considering I don't pay taxes, because I have my account set up a certain way, I also discontinued my subscription with the IRS. You write them a letter, say, I'd like to cancel my subscription. Thank you very much. You've been wonderful. Leave me off your mailing list. But that's totally up to you. And it'll probably be a good idea. If you voluntarily like to pay taxes, that's up to you. Alrighty? That being said, I don't know if Think or Swim actually covers them. Actually, does that. Agreed, blah, blah, blah. Simone, how are you? TTD. What the heck is TTD? Now, when somebody throws something out like that, TTD, the trade desk, never heard of it, but it's going to be a no. And the reason it's going to be a no this week is look where the chart is at the moment. This thing is at the high of the year. You know how I feel about the high of the year? No, thank you. You make your money in the stock market buying low and selling high, not buying high and waiting for it to go higher. You see, I like consistency, predictability, safety, and simplicity. Okay? Now, buying at the high of the year, what does that do for me? Well, now I'm sitting around waiting for it to go higher. Has it ever been higher? Well, not this year, it hasn't. Okay? This year, it hasn't been. It's never seen 110 this year. It's never seen 120. It's never seen 106. Why would I buy something going into an area where it's never been before? Amy, we already looked at Visa. Well, actually, Visa's on the list. Visa is on the list. About 8 to go. Hey, I'm new to trading, and I had a strat going, and it was going well. I was on a 5x win streak. Alrighty then, not quite sure what that means, but all right. Thoughts on Intel? Ooh, Johnny Ringo, let's take a look at Intel. INTC. Oh, it's on the list now. INTC. We'll take a look at it in a little bit. Then out of nowhere, I started losing so much money. Well, I'm not quite sure what to tell you there. Grand Rift Auto. Carlo, kick the can for another week with Macy's. Hold until you got milk. Hey, no problem whatsoever. What should I do? All right, Grand Rift Auto. I don't know you. I don't know anything about you. I have no idea what your experience is. I have no idea what your risk threshold is. That's a weird name, risk threshold. Ginger, how are you over there, Miss Ginger? Ginger, you have to excuse me. I got 5 other screens going. Facebook, YouTube, Thinkorswim. No, it's not Thinkorswim. TikTok, YouTube, and Instagram. But you got any questions, Ginger, throw them on up there, and I'll get to them as soon as I can. So, as I was saying, Grand Rift Auto, I have no idea who you are. I have no idea what your expectations are, no idea what your risk levels are, and I have no idea what your goals are. Okay, so if you really want to check, if you really want to ask me questions, send me your phone number, I'll give you a call, we'll have a chat. Okay, because I have no idea where you are, I have no idea where you're going, I have no idea anything at all about you other than what you put up here. Okay, so I really can't tell you anything. Charlo, we're going to do that. Buy books, not beer. Buy 5 Delta next day puts against SPY and Qs. It's like getting a dividend daily. All right. I'm not quite sure how that ties into what we're doing here, but all right. Shira Yuki. Hello. TTD. Johnny, didn't we just take a look at TTD? And we decided that it was at the high of the year. Take a look where it is. Okay, number one, I've never heard of it. The Trade Desk Incorporated. 105, currently the 105s are going for 162. Well, that's more than 1%. Well, let's check out and see what kind of dividends they pay and their consistency with their dividends. TTD. Okay, oh, come on. John, TTD has no dividends at all. There are no dividends in this time frame. So why are we looking at it? Kohl's, Shirayuki. We've already looked at Kohl's. Kohl's is a yes, and Kohl's looks very lovely this week, as a matter of fact. Kohl's. KSS. Okay, here's Kohl's right now. Now, I'm into Kohl's at 23. 23 is way up here. All right, it's currently at 1974. Well, I plan on selling the 21s, and the 21s are going for 75 cents a share, which is close to 3% for me. That's a 3% trade for me this week. Yeah, granted, I'm into it at 23, and right now it's at 19. Yeah, it's at an unrealized loss, but I have no intention on selling it whatsoever. I already looked at Dell. Dennis, we already looked at Dell. What was your favorite pick at the low of year? Um, Dennis, I'm not quite sure what I mean by that because there's so many companies that are getting close to their low of the year. Okay, I look at stocks twice a day. Okay, Monday through Friday, twice a day. In the morning with my morning trading group, if you guys are interested. And in the afternoons and the evenings, we're here with you guys. Okay. Would I buy more Macy's now that it is more cheaper and made a green candle? Well, Joey, let's take a look at Macy's because we all know Macy's is my absolute favorite. First thing I always want to see. The high of the year, the low of the year. Where was it a year ago? Where is it right now? And where is it currently going? All right? That's what I want to see first and foremost. After that, what am I paying for it? $15.98. Well, great. At $15.98, the 16s are going to be the closest. That's 31 cents a share. That's close to 2%. I have no problem whatsoever buying Macy's and getting 2%. None whatsoever. Matter of fact, I might put Macy's on my list for tomorrow. All right, what's the number of stocks you need to buy an option? All right, Andrea, you don't need any stocks at all to buy an option. Okay, you gotta get the terminology right because I don't buy options, I sell options. I buy the stock first for safety. Now, if I'm looking at Macy's, $16 a share, fine. I'll buy 100 or 200 shares. Actually, I'll buy like 1,000 or 2,000, me personally. Okay, but from there, in order to do a covered call, you need 100 shares to sell one option. Now, if you want to buy an option, it doesn't cost you anything. I mean, you don't need to buy the shares first. Okay. TLT, new Torage. TLT, what the heck is TLT? TLT, interesting. iShares 20 plus years Treasury, ETF. You've got to be kidding me. Why am I looking at this? All right, let's see what TLT actually pays for dividends. TLT. Okay. Oh, look how far back it goes. Is this? It is. It's a monthly. Well, cool beans. They pay monthly. All right, so let's go back to 2002. So they get 22 years of dividends. So it goes from 34, 37, 36, 38, 30, 38, 30, 32, 29, 25, 25, 26, 25, 25, 26, 28, 19, 19, 19, 24, 31, 32. Yeah, there's no consistency in the increasing, but still, okay, we'll give them the benefit of the doubt. But before we do that, let's see what their yield is. So what are they yielding? All right. So let's say hypothetically you put your money into TLT. All right. They're giving you a 3.75 yield. 3.75. That's not even 4%. You have high yield savings account to do better than this. You get government bonds that give you over 5%. This thing's giving you 3.75. Okay, that does not sound like a deal to me at all. But let's take a look. Okay, the high was 100. The bottom was 82. A year ago, we were at 94, and currently we're at 98. Okay. Last 30 days, here we go. So, last 30 days, here's your 30-day bottom. She shoots up, there's your 30-day top. Great. Pulls back, shoots up, pulls back, shoots up, pulls back. Keep on going. So it's keep going to the upside. If you like this company, I've never heard of it, I wouldn't do it. But at 98.59, the next one's going to be the 99. And look what the 99 is paying. The 99 is paying, am I reading that right? 42 cents a share. That's a 0.5%. Okay? Okay, New Torridge, a 0.5% doesn't work for me. So that's going to be a no. Even though I have no idea who they are, and I wouldn't do it anyway. 86, Dow. Dow. Now, we took a look at Dow a little while ago. 53.76 to 54s. Okay? 86, you ready? 53.74, the closest going to be set 54. It's only paying 24 cents. That's a 0.5%. That's a no. Sorry. Wham! Mining. I have no idea what mining means. Can you check Albemarle? Albemarle? A-L-B. I like Albemarle. Okay, first thing. Here's your high. Here's your low. That's where it was. This is where it is. Look at the direction it's going. It's a nice little bump up. And now, don't get me wrong. I love seeing this. Most people, they don't like this because if you bought back here, well, you're at the low. No, no, no. I buy, I sell. I buy, I sell. I don't hold on to anything. I love seeing a bottom of the year, especially with a good quality company. A good quality company, yeah, it has its ups, its downs. Okay? You have news, and that drives crap. It does. So we're down here. Here's the bottom right here. In August was the bottom of the year. So let's take a look at that. The high of the year, 204.18. The bottom of the year a couple of weeks ago at 72. So it goes from 204 to 72. That's a big freaking drop. Okay? 200 to 72. That's a $130 drop. Holy shit. Now, I buy and I sell. Okay? I don't hold on to anything. Okay, so 30 days ago, here we are. 30 days ago, we're sitting at 90, what is that, 91? Shoots on up to 100, drops down to 72. So even in a 30-day period, this is just 30 days, from 100 down to 72, that's a $30 drop. That's a 30% drop in 30 days. 30% drop, well, now it's at 72, going to 90. That's an $18 increase. That's a 20% increase. So from here to here is 20%. What do you think is going to happen? Me personally, at 20% increase, I think there's going to be a little bit of pullback coming. You got to look at the numbers. It's not all just the chart movement. Okay? Now, you had a huge drop for the year. Huge. Let's back that up again. I find that one rather interesting. From 203 down to 72. That's a huge drop. Now we're up 20%. All right, so what does that mean? Okay. At 91, currently, okay, 91.63, the 92s are going for $1.52. That's 1.5%. Okay, so think about it. If you saw this big, huge drop, now she jumped up 20% from the bottom, all right, a 20% increase, and you could buy it at 91.63, sell the 92s, collect a 1.5%, and if she's over, well, it's going to go over 92 eventually, because look where it is, okay? It's definitely going to go, back to the upside eventually. But she'll go up, she'll come down, she'll go up, she'll come down. And then she'll like stair step her way back up. That's what stocks do. Now see, on the way down, she went up, down, up, down, up, down, up, down, up, down, up, down. It's not a straight down and it's not a straight up. It goes up, profit taking, up, profit taking. And it goes down, up, profit taking, down, up, profit taking. Same thing. Okay, right now, I'm not quite sure what you want to do about Albemarle. I like Albemarle. I like the numbers, but look at the 20% increase here. That's enough to scare off somebody. Because do I really want to jump in if there's people who bought it down here and are going to jump out and take profits? Well, we'll look at this on Thursday. Okay, it's a possibility that on the bottom to here, then they took the profits, jumped back in again, and writing it up again. Because look at it this way. If you buy here, right, get to here, sell, take your profits, buy again, all right, and as it goes up again, take some more profits. Grab some profits and then do it. What about the ticker Coke? Was that Dillip? Dillip, Coca-Cola? Yeah, sorry, dude. Coca-Cola's a great company, but the premiums are horrible. And it's at the high of the year. Okay? The high of the year, 68.90. You're looking at the 70s. The 70s are paying 0.5%. I like Coca-Cola. They've been doing the same thing for the past 140 years. Why wouldn't I? Well, the reason why I wouldn't, it only pays 0.5%. And 0.5% is only going to give me 26% for the year. There are too many other companies that will give me 1%. Andrea, can we look at Baxter? You've never heard of Baxter Electric? They've been around for over 100 years, hon. BAX. Okay, first thing, as always, first thing. High, low, where was it? Where is it? What direction is it going? It looks like it's going to be a no, only because of the increase that it had in the last couple of weeks. James, how successful are you disciplines when applying your covered call strategies? Those who are in your group, are they also making 50% on an annual basis? Now, Hakuna, to be 100% totally honest with you, I'm going to say no. And the reason why I'm going to say no is because I just started this in January. So there's no possible way anyone could have any annualized return so far, considering the even the people who have been in the longest, that joined in January and joined in February. Yeah, they may make 1 or 2% every week, but nobody's up to 50% yet because we're just barely through half of the year. Okay, so this is the first time I'm actually offering this. So nobody has had a full year yet. All right, so at the end of the year, you probably ask me that same question. We'll go from there. Okay, we're gonna take a look at Baxter. All right, ready, Andrea? We're looking at Baxter. High, low, is, direction, blah, blah, blah. 37.65 to 38, so going for 10 cents a share. Sorry, Andrea, the number's just not that nicely. Rio pays twice a year, not monthly. Okay, Rio is still a no, but thank you for the information. Coke, Dillip, Apple, ooh, Marathon Man, AAPL. Take a look at that, isn't that nice? Okay, she shoots from here, 165 up to 235. You get your profit taking, now shooting up again. There's going to be some more profit taking very shortly. But let's take a look at the numbers. High, low, is, direction, la, 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 all that kind of nice, neat stuff. And we'll take a look at the numbers. The numbers for Apple, 227. Well, the 227 is going for 225. So you're walking away with just 1%. You know what I like best about Apple? Take a look at this. Well, here's your high here. Okay? Here's your high of the year. Drop, up, drop, up, drop, up. Okay, she's slowing down right here, so she might be running out of steam. Don't know. But this is what I really like about Apple. Check this out. We're going to take a look at the seasonality chart for Apple. Now, take a look at that. Okay, the blue line represents this year, but look at the red line. From January 1st to December 31st. That is a nice, slow incline to the upside from the beginning of the year to the end of the year. Okay, what do I want to see? I want to see this area right here, which is this area right here, because that's where we are at this moment in time. So the next 2 weeks, all right, the next 2 weeks is a very, very, very slight upward tilt to Apple. No, I like Apple. All right, now Apple's not on my list. Apple was on Warren Buffett's list because Apple doesn't have 20 years of increased dividends. You like the new room setup, 86? Yeah, I do and I don't. I need a new screen. See this big black mark there? It's really interrupting. So it is a new, it may be my permanent room, but I still need some more maneuvering to be 100% happy with it. All right, do you remember what workspace setup you are using in Thinkorswim? What workspace setup I was using in Thinkorswim? Sorry, Tasha, I'm not 100% sure what you mean by that. Now, Tasha, I told you a couple of weeks ago, you want to chat and you want to ask me some serious questions. Send me your phone number, I'll give you a buzz. We'll sit and we'll chat. All right, LA Sound Waves, Hollywood. What's happening? Oops. Hollywood, what's happening? Where are you? Uh-oh, I went past it. Uh-oh, I see him right there somewhere. Wow, I missed all these questions. Holy shit. Uh-oh. I can't believe I missed all these questions. Here we go. Hollywood. CC. All right. Now, Hollywood, you don't want me to look at, is that CC or Bud? Covered calls on Budweiser. BUD. Okay. 61 to 62. 62 is going for 40 cents. No, quickly, look at that. Budweiser. Right here, we're at 61.69. I can buy it at 62. The 62 is going for 40 cents. Not quite there. Sorry. Peloton, JDP. What the heck is Peloton? Is that Peloton? Yeah, that's going to be a no, dude. And the only reason why Peloton's going to be a no, they haven't been around. They're relatively new. Can you recommend a tax strategist? Richard Bruner? No, I cannot recommend a tax strategist. Tax strategist I was chatting with finally sent me an offer. Okay, she wants me to pay her $100,000 for me to collaborate with her. So I'm thinking to myself, no. Okay, why would I pay someone $100,000 to collaborate with me if I'm bringing her clients? It didn't make any sense. It's not generally a good strategy to buy when you're high. You're absolutely right. I don't buy at the high. I like buying at the low. You're going to make your money buying low and selling high. Look where Peloton is at the moment. The bottom's here at 250. Now it's at 484. It depends on where you jumped in. Remember, it's a merry-go-round. Once you jump in, that's your number. Okay? Okay, it was up at almost, what, 7.25, dropped down here to 250. Okay, now it's here. Okay, sorry, it doesn't have enough historical performance for me to give any kind of feedback on it. I'm looking to buy a few dividend stocks to hold for long term. What do I recommend? Well, Levi, I have no idea who you are. I have no idea what you're looking for. Okay, and my idea of long term is 30 days. So I'm not quite sure if this is the right place for you to be. All right, no disrespect whatsoever. I believe on people buying and holding for a long period of time. But did you hear what the new tax proposal was? Kamala Harris wants to tax unrealized profits. So if you buy something, let's say you buy Peloton at 480. And let's say over the next 5 or 10 years, it jumps up to, I don't know, $5 or $10, whatever. You got to pay taxes on that unrealized gain. So anytime you buy something and it goes up in value, if you don't sell and take your profits, you're going to pay taxes on that profits anyway. OFS. Robert, I've never heard of OFS. OFS. It's a monthly optionable stock. It's an automatic no right off the top. Okay, Robert Wilson, you like Pepsi. PEP, I like Pepsi too. Unfortunately, Pepsi at $175.99. The 177 is going for 69 cents. Not even 0.5%. I love Pepsi. Don't get me wrong. I do. But if it's not giving me what I want, why would I want to invest in it? Okay, they're over 100 years old, not going anywhere. How do you know when the stocks are going to pay a dividend? Mofo, what's happening? Okay, Mofo, you're new here. I'm really good with names. The reason I know when stocks are paying their dividends is called the EX dividend calendar. Okay, if you like a stock, you put it into the calendar and they'll tell you exactly when it pays its dividend. That's simple. You can go to Google, put in EX dividend calendar, and a whole bunch will pop up. I like this one here. It's already in my trading platform. The trading platform I use is Thinkorswim, and that is owned by Charles Schwab. Next on the list, Cornell Patel. We already looked at Abraham. Phil Mills, do you consider 2% of portfolio in options and 3% in option hedging against larger stock positions? All right, Phil, you're relatively new here. Let me explain to you briefly what I do. Now, the trading strategy I am teaching here was created for my 9-year-old. She was 9 years old when I created this trading strategy. Now, I've been trading for over 20 years. I've been doing a lot of crazy, wonderful things, blah, blah, blah. But that's not what I'm teaching here at this moment in time. What I'm teaching here is a combination of dividend capturing and covered call writing, putting them together. I call it dividend capturing 2.0. We look at dividend stocks. When they pay out their dividends, we like to buy them 2 weeks before the dividend date because stocks have a tendency to go up in value before they pay their dividend. By doing that, I like to buy 2 weeks ahead of a time on a Monday, buy it at the money if the charts are correct and the numbers work. Okay? Do you think we are going to face September stock bloodbath? Amy, I've never heard of that. All right, so Phil Mills, I'm not 100% sure what you're talking about, that 2% folio in options. 98% of all my money is invested at all times in this particular strategy. I buy a good quality company and I sell covered calls against it until it hits my target price, and then I jump into another one. All right, Mason, you want to look at spiders. Now, Mason, I'm going to satisfy your desires, but you're not going to be happy about it. You ready? SPY, spiders, 562. And it's going to be a no. There's several reasons why spiders are going to be a no. Reason number one, it's out of my price range. Okay, I like to stay at 250 or below because it's a long fall. That's number one. Number two, 562, I like to get 1% per week. Now, if spider is at 562 at this moment in time, if I take the decimal point and move it over 2 places, I want to get $5.60 per share. The 562 are going for 415, which is less than 1%. So spiders is going to be a no. But wait, it gets worse. Let's put spiders into the chart, into Yahoo Finance, and see what kind of a yield you are currently getting this year on spiders. Okay, so spiders, SPY, $556, and you're getting a 1.24% yield for the year. 1.2% for the year. That's 0.1% per month. Now, Mason, you're relatively new here, so you're not quite familiar with the fact that I like to get safe, predictable, consistent 1% per week. Okay, spiders doesn't fit that category. So even if we look at historical performance for the spiders, take a look at what kind of dividends they pay, dividends only. Now we want to go here and look at the maximum amount of dividends. I'm only going to go back, about 10 years. Okay, 2010. All right, so we'll go to 2010, which is 12 years ago. Look at the numbers. Okay, 60 cents, 65, 55. It's going backwards. 63, 77, 61, backwards again. James, those who have been with you for the longest, are they making 1%? Well, they're actually making more than 1% per week. Ray, Hakuni, you went from there to there. Okay. Now, there's a lot of people on here that make 1% or more every single week along with me. Some of them do, most of them do, some of them don't. Now, I don't understand why that is, but it is. Astro, you're investing in Walgreens dividends. I have no idea what that means. How long do you hold the option stocks? All right, I buy the stock and I sell an option on it right away. Oh, so wait, let me finish up with spiders. Okay, so as you see the dividend, 63, 77, 61, 78, 102, 69, 84, 98, 94, 114, 103, 105. Yeah, it's going up, it's going down, up, down, up, down. No consistency in the growth whatsoever, only paying less than 2% for the year. Yeah, spiders is going to be a no. Think about it. Why would you put your money in a place that's giving you less than 2% a year when you could do it on your own and get an average of 1% per week? Even a half a percent per week is better than what the spiders are offering you. More questions, more questions. James, anyone you recommend talking to so I can also cancel my subscription to the IRS? Dude, you're gonna have to do some research on that. There is some pretty damn good research and some pretty damn good, what do they call that? Hold on. Precedents. That's the word I'm looking for. There's a whole shitload of precedents about the IRS and the collection of taxes. That's not something I like to talk about because last time I did, I got a red flag, and I don't like to be red flagged. I bought new shoes at Macy's today, and they have a 25% off sale. Well, alrighty then. Do Walgreens, please. Astro Walgreens. All right, so Spider's going to be a no. Let's go Walgreens, WBA. WBA, one of my favorites. Okay, now, as we can see, okay, the high is here, the low is there. That's where it was. This is where it is. This is the direction it's going. All right. Next, I'm looking at the numbers. 1032. Well, the 10's going for 39. That's not quite going to make it. The 1050s, that's not quite going to make it either. So even though I do own Walgreens, I won't be buying any more this week because the numbers don't work this week. Now, I like Walgreens, and they consistently give me a 1% or more. At this moment in time, I'm into Walgreens at 12 bucks. And the 12 is crappy. But I would probably be selling the 11s or the 1150s to give me some kind of income. But don't go. You can trade options with 150 bucks. Yes, you can. Thank you, James. 100 is what I need to know. All right. Is Robinhood a good place to start? Yes. Andrea, BMY, Bristol Myers Squibb. BMY. Uh-oh. BMY. Okay, Bristol Myers Squibb. Check it out. Here's the high a year ago. Here's the low back in July. That's where it was. And this is where it is. And this is the direction that it's kind of going at the moment. 48.19. The 48's going for 68. Nice. The 48.50's going for 45. Both of them will work. True Blue. I'm doing Walgreens. They just got dividend. Alrighty. So, Bristol Myers Squibb, the last 30 days. Here we go. 30 days ago was the 30-day bottom, and then she gapped up. Well, the gap came down, shot up, came back down again, and this is a possibility where she could be turning to going back to the upside. Now, here's a bottom here. I like 2 days of the upside. So Monday may be a day to tell me whether or not Bristol Myers Squibb is going to be a good stock to jump into. Now, let me quick take a look at what does a seasonality look like. What does it normally do this time of year? And that does not look very favorable. Okay, she's going to bump up a little bit, and then she's going to go downward. So I'm going to say no to Bristol Myers Squibb at this moment in time, but that's just me. TLT is a treasury bond. Okay, TGTX. Dawson, TGTX. I have no idea what that is, but let's take a gander at it. TGTX. TG Therapeutics. 24. It's at the high of the year. Okay, here's the high of the year. There it is. Where do you think it's going next? Okay, I don't like buying at the high, right? I like buying at the low. Okay, it goes down, it goes up, and then it goes back down again. That's what I'd be looking for. But I've never heard of TGTX. Matter of fact, let's take a look at Yahoo Finance. Put in TGTX. And they have no dividends at all. Okay, there are no dividends in this select time period. So my question is, Dawson, my question is, why would I jump into a company that doesn't have dividends, especially if it is a dividend investing for weekly cash flow? Hakuna. Oh, Dennis, you want to take a look at Occidental Petroleum, OXY? OXY. First thing, hold on, Hakuna. First thing, here's the high, here's the low. That's where it was. This is where it is. This is the direction it's going. 57.25. The 57 is going for 70. If I'm losing 25%, that's bringing me less than 45. Yeah, nope. And then, yeah, no. Sorry. OXY, the numbers just don't look right. What software do we use? Lobo, this is not software. This is a trading platform. It's called Thinkorswim. Do you have a preference with how many times you want the company to have dividends per year? I prefer 4 times a year, preferably, because it allows me to put it into a roster or a Rolodex and consistently do the same thing over and over and over again. It doesn't really matter, really, because I'm always looking at the calendar. Okay, so the last week of August, you have 3M, Johnson & Johnson, KeyBank, Baxter, Corning, Heinz, Kraft Heinz, Newmont. Okay, that's on that list. I have other lists also. It is what it is, and it's the date that tells me when to look at a company. What do you think of PDD? Oh, Tic Tac. PDD. What the heck is PDD? If anytime anything starts out with a what the heck is that, it's going to be a no. Usually. PDD Holdings. Over to Yahoo Finance. PDD. Now, who said that one? Tic Tac. Seriously? Oh, I'm talking seriously. There are no dividends. Okay, so the channel you are on, up in the top corner, it says dividend investing for weekly cash flow. So what makes you think a stock that has no dividends whatsoever is going to actually fit into this trading scenario? Dawson, TGTX, we already looked at that. It was a no. I did look at PDD. Okay, PDD. There you go. Okay, 140.58. The 140s are going for $6. That's craziness. The 141 is going for $5. Well, that's a nice freaking premium. But it has no dividends. Okay? If there are no dividends, think of it this way. Is the premium usually lower if you have dividends 4 times a year or 1 or 2 times a year, or does it have any impact? It has no impact whatsoever. Okay, the question was, is the premium usually lower if it has dividends 4 times a year as opposed to 1 or 2 times a year? No, the premium has to do with the market maker, okay? That's the market maker's job. Okay, the dividends is the corporation's job. Two totally separate entities whatsoever. All right, if you don't invest 150 minimum, then dividends are not worth your time. Okay, Derek, I understand what you're saying, but I'm kind of lost. We're not doing dividends. We're not looking for dividends. We're looking for premiums. And at 1% per week, well, it depends on what you're looking at. At 150,000, 1% a week is $1,500. At 100,000, well, 1% a week is $1,000 a week. At $50,000, well, 1% a week is $500. You get $25,000 a week, 1% is $250 a week. So it all depends on what you're starting out with, but 1% is 1%. That's what we're looking for. Safe, predictable, consistent 1% per week. And you don't need 150,000 to get started, and everyone is different. You know, you may need $5,000 or $10,000 a month to live comfortably. I may need $2,500 a month to live comfortably. Okay, Dawson may need $30,000 a month to live comfortably. Everyone is different. So I don't go by you know, how much I make on a weekly basis. I go percentage wise. All right. So if you tell me you made $20,000 this week, I say, well, great, fine. What'd you start out with? Because if you make $20,000 off a $50,000 investment, well, yeah, that's impressive. But if you make $20,000 off of $2 billion, that's not impressive at all. What about life insurance? Ooh, I like life insurance. Okay, General Choi. Okay. Erica, hello, and how are you today? All right, Andrea. James, what is the ticker for Able? I don't know. ABLE. That's what it is. ABLE. Able Energy. And they have no options. Sorry, it's going to be a no. I can get a dividend within a week. Jordan, yes, you can. Hustling Daily. Good evening. How do we join the morning group? Dallas Guns. Hey, Dallas, I got a question for you. Hold on. Boomer ruined economy doomed. Oh, my goodness. Boomer ruined the economy doomed and never retire. Okay. What about SPYD? SPYD is going to be a no. What stocks do you recommend for tomorrow? Zane the man, I don't recommend anything. What I recommend is people do your own research. What I'm doing is I'm just looking at the stocks you guys asked me to look about. Let's talk about Walgreens. Astro, we already talked about Walgreens. You're a little late to the party. How much you need to get started? Rat's Man? Is that right? Ratchet Man? Ratchet Man! Call burning down. Oh, I forget how that goes. Anyway. Mathematical analysis. Sent me a message and they retracted it. Way to go. How much you need to get started? You can start with anything you want. It all depends on... See, one thing we both have in common, what we all have in common, is we all got 24 hours in the day. Okay, the market opens at 9:30, the market closes at 4. How and what you plan on doing, what strategy you plan on using, that's totally different. Everyone's different. Everyone has a different idea. I'm just sharing the idea that I use for a safe, predictable, consistent 1% per week. You guys are throwing stocks at me and asking me questions. I'm answering them as best I possibly can. All right, so let's keep on going. Bank of America. BAC. I actually have Bank of America. Jordan, I don't do any penny stocks at all. Okay, if a stock doesn't have 20 years of increased dividends, I don't want to look at them. Okay, we'll look at Ford in a little bit. We'll write that down. Ford. All right, Bank of America. I actually have some Bank of America, so let's look at it. All right, here's the high, here's the low, here's where it was, here's where it is. This is the direction it's going. It might be a no for the day because looking at the high, look at that movement right there. Now, that's the chart. 39.83. So I'm looking at the 40s. The 40s going for 36 to 38. Not quite giving me that 1% that I want. Next week's are going for 101. Ooh, I was yawning. Sorry about that. Okay. So, look at the last 30 days for Bank of America. It's your high way up here at $44. 44. Here's your drop. Here's your run up. A little bit of pullback here, and it's going to continue going up. You have all this space up here to go to challenge that 30-day high. So Bank of America looks like an interesting trade. However, you're not getting a complete 1%. 39.83. The 40 is going for 38. Okay, that's like 0.98%, just a smidge under 1%. All right, put that right there. Back to my Call. It actually helps out with a sore throat because I'm not used to talking to so much. Seriously, I'm not. I'm not used to talking this much. Ken, oh, at a morning group discussion. All right, Jordan, no penny stocks at all. Bama Redneck morning group. Can you take a look at Ford? Now, do I actually have any? I don't think I have any Ford. Nope, no Ford here. Yep, I got Ford right there. Nope, I sold Ford. I had Ford last week and I sold it. And I had Ford last week and I sold it. So I had Ford in 3 different accounts and I sold it from 2 different accounts. Now remember, I got 6 different accounts. I share 3 of them with you guys. The other 3 I don't share with you guys. I'm a nice guy, but I have to draw the line somewhere. So Ford, the last 30 days, look at this high right here. 1460. It's just below, just above $9.50. Look at that run up. Nice. Now I bought it on Monday and then I got rid of it. Well, I made my 1% off it. So why do I want to hold it longer? Am I wanting to catch this run up here? No, I don't. I want to catch the 1%. And the 1%, 11.27, going for 33 cents. Not quite making you 1% this week, but it did make 1% last week. Okay, so it doesn't work every single week with every single company. Now, we looked at it last week. I jumped in it on Monday, okay, 10.50. I sold the 10.50s and I jumped out because it went up to 11.27 on Friday. I'm not looking for capital appreciation. Remember, there's only 2 different kind of stocks. You have companies that will put all their profits back into the company for capital growth. If you're looking for capital growth, you're in the wrong place. I mean, thank you for being here, but if that's what you're looking for, this is not the place for you. That's not what I'm looking for. What I'm looking for is a simple, safe, predictable, consistent 1% per week. And the way I get that is I find a good quality stock. Now, what do I mean by good quality stock? A company that has historical performance behind it, that is consistently profitable. Now, I like to cheat. I like shortcuts. I could go in and take a look at all of the earnings reports. I could take a look at the quarterly reports and the annual reports and analyze all of them and then take advice from all these different gurus out there. Or I could skip all that crap and go right to the dividends. Now, the dividends is a portion of the company's profits that they give to the investors. If that portion of the profits increases every single year, well, logic, reason, common sense, there's a couple other ones. Anyway, all that tells you is the company is consistently profitable. If they increase their dividends every single year, that means every single year they must be making more and more money. That's what it means to me. Okay, if you're profitable, you're going to dish out more profits. Simple as that. So, with that being said, why would I look at a company that's not consistently profitable? Okay, buy a decent quality company at the right time. Ford is a good quality company. They've been around for over 100 years. At this moment in time, it's 11.27. Okay, the 11s are going for 33, but I'm losing 27 cents off the top, which means I'm walking away with 6 cents? Hell no. But last week, Monday, it made sense. It was 1% last week. Is it going to be 1% every week? Some companies, yes. Some companies, no. That's why we look at it every single day. Now, I've been looking at my portfolio every single day for the last 20 years because I want to retire. And I don't trust those guys on Wall Street. I don't. Because what do? They say, give me your money. We'll give you a 4% draw. Well, a 4% draw means I got to go back to work. No, thank you. I prefer to do it myself, get 1% per week. I grew up in a time, the 60s, 70s, and 80s, where I'd get up in the morning and go to work, 8 o'clock Monday morning, 4 o'clock Friday afternoon, we get our paycheck and we go home. Well, this basically does the exact same thing. The market opens up at 9:30. I jump in at 9. I take a look at all my trades. I'm usually done by 10:15. Okay, for myself, it's 10 to 15 minutes. But with the morning trading group, it takes a little bit longer because I'm explaining things and answering questions at the same time. I don't mind because it gives me something to do. Being retired, I got to have something to look forward to. And I actually enjoy helping out some of you people make money, and some of you guys do. Not everyone. I can't help out everyone. If you want help, I'm here to help. All right, Ratchet Man. How much do you need to get started? Different for everyone. Uh-oh. Damn it. If I hit the wrong button, it goes the wrong way. La, 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 la. What are you considering this week? What are your overall thoughts on SPY? I love big fat black women. Well, that is an interesting name. And they say there's an ass for every saddle. Good for you. Now, I love big fat black women. I don't do spiders. Sorry. The numbers just don't work for me. It just doesn't make sense. Terry, thanks. You're welcome. Shark. Okay. Shark. So you think or swim. Okay. GOF. Guggenheim Strategic. I've never heard of them. Now, just for a little point of reference, anytime I say I've never heard of them, it's usually going to be a no. GOF, 15 bucks. It has no options. Guess what? That's a no. Disney, $90.65. Okay, disappoint you just a smidge. Disney, $90.65. The closest strike price is going to be the 91. The 91 is going for 77. That's not quite 1%. Don't get me wrong, Disney every once in a while does give 1%. Bodo, Apache. Let's take a look at Apache. You've been waiting long enough. It is on the list. I'm going to cross it off. Apache, 28.52. Okay. Well, here's your high. Here's your bottom. That's where it was. This is where it is. It went up a little bit, pulling back. 28.52 to 28.50 is 45. Not quite 1%. Close, but not quite there. All right. So take a look at the last 30 days. Okay, here's your last 30 days. 31, it shoots up to 33.50, drops down to 26.50, shoots back up, pulls back. Here is an interesting thing right here. Now, if this is truly the bottom, I like 2 days to the upside. So tomorrow, if you like Apache, tomorrow, if it's up again, that could be an indicator to jump in. However, pay close attention to the ask price, because that's the purchase price. If I buy it there, what am I getting? Well, at this moment in time, it's just a tiny bit. Right, 28.50. Yeah, 28.50 is giving you 1%. Okay? That number actually works. If this is the bottom. But we don't know until tomorrow. Because she goes up, down, up, down. Now, if this is the bottom, great. I like 2 days. I like 2 days to the upside. You have to decide what's right for you, because my 2 day upside might not work for you. ENB does quarterly dividends at 7%, 30-year history. All right, well, let's take a look at ENB. Enbridge. Yep, that's going to be a no right off the top. Okay? Big brain? No. Why is it a no? I can tell you a couple of reasons right off the top. Reason number one, it's a monthly. No. Reason number two, it's actually at the high of the year. Okay, I don't buy at the high, wait for it to go higher. Yeah, I don't do the thing. Okay? So, if 39.66, 40 is going to be the closest one. 40, okay, now explain to me, okay, big brain, explain to me a manner in which I'll understand, because you're saying ENB. 39.80. The closest strike price is going to be the 40. The 40 is paying 40 cents a share. That's 1% for the month, which means you're getting 12% return for the year. Why the hell would I do 1% per month when I could do 1% per week? Now, I know I didn't go to college. I admit that freely. The only license I possess is a license to drive a vehicle. That's it. Okay? I'm not a finance major. I have no education whatsoever other than the road of hard knocks. And that's a tough one. Okay? But explain to me a manner which I'll understand if I'm buying it and it's offering me 1% for the month, why would I find that enticing whatsoever? But wait, it could be worse. Let's go into ENB. Okay. Okay, plenty of dividends. Went from 10 cents to 11 to 13 to 14 to 17 to 15 to 21 to 24, 28, 32, 32, 36, 38, 40, 48, 51, 67, 65, 66. Well, that's nice. Consistently increasing. Nice. But let's see what kind of a yield it's offering. Yeah, explain to me why you think 6.7% annual yield is better than 50%. I'm waiting. Explain to me and everybody here why you think 6.7% is a good investment. Now I'm showing you how to get a simple, safe, predictable, consistent 1% per week. That's 52% per year. 52% per year. And you think that 6.7% is better. All right, anyway, let's move on. ENB's a no. Sorry, I don't like it. It's a monthly. The premiums really aren't that. Premiums are horrible. Is there a book you recommend for beginners? Joey, the book I started out with was called Wall Street Money Machine by Wade Cook. AGNC, well, there's a good one. AGNC. $10.19. Well, I'm going to say no to this one. The reason why I'm going to say no to this one, look at the premiums. Okay, here's your high, here's your low. That's where it was. That's where it is. 10.19, the 10.22. The 10s are going for 20 cents. Okay, you're actually losing money on that one. Yeah, no thanks. Sorry, the numbers don't work. Now, don't get me wrong. I like AGNC, but this week the numbers just don't look good. Okay. It will also need to have weekly option. EMB has monthly. Thanks, 86. What's your thoughts on the ticker HE? Hawaiian Electric, that's going to be a no. Now, Hawaiian Electric stopped paying dividends, during the, well, was it before the fires or after the fires? So they have no income coming in. Michael wants to take, why are some quality dividend stocks that have been around for decades have a much lower stock price? Charlo, I don't know that question. Okay, now you and I, we decide what is too high and what is too low. The market maker, he sets a starting point for every day. But you and I, the buyers and sellers, we decide where the high of the day is, where the low of the day is, and where it closes for the day. Those are the only numbers that we have control over. The market maker has the rest. Okay, Michael, Altria, we looked at the other day. I think we looked at it yesterday. It's going to be a no for this week. Now, I like Altria. They've increased their dividends for over 5 decades. They are a dividend king. Okay, but they're at 52.44, which means they're at the high of the year. You're better off buying at the low. All right, wait for it to come back down before you jump in. That's my personal opinion. My opinion, not my recommendation. There's a huge difference between the two. All right. One is Moody, Digon Duty. Okay, that's interesting. Was wondering if it was a great opportunity to buy. I have no idea which one we're talking about. Now, you got to remember, okay, now you guys here on TikTok, you got to remember, I get questions here on Facebook, questions here on Instagram, questions here on TikTok, questions here on YouTube, and then more down here. So I have a whole shitload of questions going through. So when you say something and it's not all compacted into one and it's scattered out, I can't follow it. I love big fat black women. I already said no to spiders. Mahesh, we already did Dell. Lunar. Oh boy. Poker Trader. I think I looked at Lunar once or twice, and I think it was a no. $5.24 a share. Luna. Luna. Okay, Luna has no dividends, okay, and it doesn't even give me a yield, so I can't even tell you how good or bad they are. AGNC, we already looked at that one. Is there a weekly percentage movement up for quality dividend stock you like to see? Charlo, not at all. Okay, now Charlo, you've been here past couple of weeks. You know what I'm looking for. I'm looking for the high, the low, where was it, where is it, and I'm looking for an upward pattern. Upward pattern, because stocks only go up and down. That's all they do. They go up, they go down. They go up, they go down. Okay, up and then down. When they come down off of a high, that's when you want to start looking for the movement on the bottom. Because they have a whole bunch. You always buy and do covered calls for getting 1%. Mahesh, yes I do. That's all I do in this account. Terry, we already did ALB earlier today. Do you do operations in real time live? Yes, I do. Was that JJ33312? Yeah, I have a live training group every morning, 9 a.m., Monday, Tuesday, Wednesday, Thursday. Friday, we jump on at 3 o'clock. Now, the reason we jump on at 3 o'clock on Friday is because options stop trading at 4 o'clock and then they all expire on Saturday. Stifler's mom. I'm confused about why the dividend matters if your goal is to make money off the option. Stifler's mom, you've been here long enough. I'll tell you why dividends matter. Now, let's see if I can explain this as simple as possible. Am I related to Jeff Bridges? Did I really see that question? Where were we? Where were we? Stifler's mom. Here we go. Stifler's mom. I'm confused about why dividends matter. All right. Here we go. The reason why dividends matter is because there's 9,606 companies available to invest in at any moment in time. So how do you find out which is a good one to invest in? Me, personally, I like companies that are consistently profitable. Well, how can you tell if they're consistently profitable? Well, I could read all the earnings reports. I could read all the annual reports to find out. I could listen to some financial advisors and get their opinions. Or I can skip all that crap and go directly to the dividend. The dividend is the portion of the profits the corporations give to the investors. So you have two different kinds of companies. One will take the profits and put it back into the company for capital growth. If that's what you're looking for, you're in the wrong place. The other set of companies will take all those profits and share them with the investors. That's what I want. I want cash flow. I do not want capital appreciation. So, let's jump over here for a second real quick so that you can see what I mean. Finviz.com, Financial Visualizations, is a website which you can find a lot of detailed information. The most important thing I want to find, okay, the most important information I want to find is right over here in the corner. Now, the number has changed yet again. 9,596. Okay, we checked earlier last week, it was 9,606. Well, now it's down to 9,596. Let's just call it 9,600. So there's 9,600 companies available anytime at all. Now, by clicking this one little symbol right here, the dividend yield. So once you isolate the companies by who pays a dividend, well, let's just say positive dividends. So out of that 9,600 companies, only 5,457 actually pay dividends. Okay? Now, I want to go to the other side and go right here to options. Because if they don't have any options, I have no desire to look at them. So if I go to options and put optionable, Well, now I'm down to 3,352. Still a lot of companies to cipher through every week. So what am I looking for? Well, I already know that I'm looking for weekly cash flow. I'm not going to go through 3,352 companies every single week to find out what's best. So what do? I take a look at the cream of the crop. What do I consider the cream of the crop? Well, I consider the cream of the crop companies that have consistently increased every single year their dividends, which means they're consistently profitable. I like 20 years, which is 2 decades. Okay, most new companies don't make it past 5 years. 1 in 100 or 1 in 1,000 will make it to 10 years. So can you imagine how good a company has to be to make it to 20 years and consistently increase their dividends? Well, they have everything going against them. So let's say hypothetically, I only want companies that have a proven track record of 20 years or more of consistent increases in profits. Okay, there's some companies out there that have been around for over 20 years, but they're not consistently profitable. I don't want to look at them. After all, this is my money. I want to take my money, I want to invest in a good company. So the reason why I look at dividends and if they're continuously increasing, because it's a shortcut. I don't want to read 3,300 and something different earnings reports or quarterly reports to find out which one continuously profitable. I can just go right to the dividends. It's simple. Dividend Kings, 54 companies that have increased their dividends every single year for 5 decades. Dividend Aristocrats, Dividend Champions. Okay, Dividend Aristocrats, I believe there's 57 that have increased for 25 years. The Dividend Champions, 150 companies that have consistently increased for 25 years, a little bit less rules than the Aristocrats. Now, the Dividend Contenders, 10 years to 24 years of increased dividends, and there's 300 of those. So if I'm only looking at the companies that I deem to be worthy, and those are the ones that are consistently profitable for more than 20 years, consecutively 20 years, and have weekly options. Those are my 2 parameters, 20 years of increased dividends and weekly options. Well, simple. You go to Google, Dividend Kings List 2024, Dividend Aristocrats List 2024, Dividend Champions List 2024, Dividend Contenders List 2024, and you take those lists and you go over to the CBOE, Chicago Board of Options Exchange. Which one of these companies have weekly options? Boom, there you're done. You can only do that once a year because every year the people that monitor the Dividend Kings, well, they adjust it. Well, do we have any new Dividend Kings? Is anyone dropped off the list? This year, 3M has dropped off the list. Now, 3M has been paying dividends and increasing for 62 consecutive years. This is the first time in 62 years 3M has decreased their dividends. So they're actually off the Dividend Kings list. But I'm still going to trade them because they're still over 100 years old. Anyway. Stifler's mom uses Dividend Kings, the entry point, blah, blah, blah. You already did that. You're playing PVH earnings, boss. United States of America. Okay, that's an interesting name. Cool. You're playing PVH earnings. I have no idea what that means. All right. I'm in PayPal right now. Just broke out of a falling wedge and rectangle on the daily. You know, believe it or not, I understand every single thing you just said. However, what you're missing, and you're new here, and so I'm going to cut you some slack. The trading strategy I am teaching here was created for a 9-year-old little girl, and you've never seen this, so I'm going to show you. Go to my YouTube channel, okay, which be The 10-Minute Trader, and I'm going to go under videos, and then we're going to go to the oldest videos, and then we're going to pull up this one right here.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
It's in January, so 4 days in February. over here and still trades a month. 20 days in the month of January, you can do two. One every 10 days. Okay, so you get 2 January, 2 February, 2 March. Okay, so you've never seen that before. I created this trading strategy for my 9-year-old daughter back in '08. 5 criteria that I had to meet. It had to be simple, it had to be safe, it had to be predictable, consistent, and no way that she could lose. Okay, fine. So I came up with the 5 rules. Rule number 1, never buy something you do not understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. I like 20 years of consistent dividends. Rule number 4, weekly options. I like weekly cash flow. Safe, predictable, consistent, 1% per week. And rule number 5 is make sure all the numbers work. So after I picked out the stocks that I like, there's about 300 of them that I keep track of in the calendars. That's basically how I do my trading, based on the calendar. Make sure the numbers work. Well, I know what the high is, the low, where it was, where it is. The chart tells me one thing. The option chain tells me another. Well, this is what I'm buying it for. This is the closest strike price. This is what I'm walking away with. This, right here, the premium that I collect by doing a covered call. Covered call, by the way, is one of the safest trading strategies there is. Easy to qualify for. 35 cents on a $5 stock. Oh, hell yeah. But the numbers have to work. Everything else has to fall in line. Lunar is not part of what I would call a good quality stock for me for this trading strategy. So even though I understood everything you said, the falling wedge, the rectangle, the daily blah, 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 all that stuff, it doesn't fit in this trading platform with this trading strategy that I am teaching. But I do appreciate your information. What stocks are you selling tomorrow? I'm not selling stocks tomorrow, Erica, I'm buying. Charlo, could I make my trades after hours on Monday without being in real hinder? Yeah? Then fill the very next day. Brian, you want to take a look at WIN, W-Y-N-N. Now, just to let you know, I do have some WIN. I dollar cost average down on this thing once. Okay, first thing, always want to see, where's the high, where's the low, where was it, where is it, what direction is it going? It made this big drop here, now it's turning around going to the upside. Now, I've been telling people all along, you're going to make your money buying low and selling high. You're not going to get any lower than the low of the year, which is right about where it is right now. So the question is, do I like WIN, and do I like WIN at this current price? So 77, 70 to 78s are going for 71, just barely making your 1%. But tomorrow morning, all these numbers are going to change, but the mathematical equation stays the same. It's my purchase price. These are the strike prices. This is what I can buy the strike. This is what I can sell it for. So at 78, it's going for 71 cents, which is not quite 1%. Giving fundamentals 20 years increased dividends and weekly options are all US and UK. Am I consider also? I have no idea what that means. Guidance. Hi, James. Y'all have a wonderful week ahead, and best of luck to y'all. Cool. Justin, I have no idea what you mean by that. Given fundamentals, 20 years increased dividends, and weekly options are all US and UK EMEA. I have no idea what it means. Considered also. UK, I don't know if any UK stocks are traded in the United States. Delta delay. All right, Bar, I don't do deltas because you're missing the simple part. Okay, so if I try to explain the Black-Scholes pricing method for options to a 9-year-old, it's going to go right over her head. She's going to lose interest and not want to do it at all. Am I related to Jeff Bridges? Yeah, somewhere on the tree. Walgreens is getting reported to the DEA by many doctors. They are in shambles. Okay. Can you do PayPal with PVH? What the heck is PVH? Okay. PayPal, PYPL. That's going to be a no. That was quick, wasn't it? Why is it a no? Well, it's at the high of the year. Okay? Why else is it a no? PYPL. And then we want to go to historical data. And why are we looking at historical data? We're looking at dividends only. Well, if PayPal has no dividends at all, why are we looking at it? Okay, you got to remember, this channel is specifically dividend investing for weekly cash flow. If PayPal doesn't have any dividends, why are we looking at it? 4 times dividends per year, is that the maximum you can find? No, 12 times a year is the maximum, or most frequent when you are talking about several times per year. All right, Hakuna. Albert. Hey, Albert's just signed in. Hey, Albert, how you doing? Holy cow, we're at 126. Up, and we're below 200. Remember the rule. If we're below 200 at 11:30, we're done. So, if PayPal, you're going to lose big. Wow, I appreciate that, OQ. All right, so United States of America, PayPal, sorry. If it has no dividends, I have no desire to take a look at it. I have 300 companies in my roster to take a look at. Why would I put something in there that doesn't fit in the parameters? Now, let's say hypothetically, PayPal goes down. Okay, look, it went down, it went up, it went down, it went up, it went down, it went up. Okay, that's all it does. It goes up, it goes down. So what happens when it goes down really big and it doesn't recover? Well, at least if it has dividends and consistently increasing the dividends, absolute worst case scenario, I'm getting more and more money every single year. Now you got to remember, okay, people mainly bought stocks to collect dividends or for capital appreciation. Now, I'm buying them for weekly cash flow. Okay? Weekly cash flow is a whole different set of rules when you're doing it on a weekly basis, as opposed to, most people buying stocks and holding on to them from decades. 12 times, that's a lot. Not really. How common is that? Okay, Hakuna, what you're going to find companies that pay dividends. You have some companies pay once a year. Some companies pay twice. Some companies pay 4 times, which is every quarter, and then some companies pay every single month. It doesn't mean anything. It just all depends on what your rate of return is going to be. All right, Bar, you want to take a look at Run, RUN. I never heard of it. Okay, usually, if I never heard of something, it's usually going to be a no. First no you're going to get is right here. It's at the high of the year. Well, that's rule number 1, no. I don't buy at the high, wait for it to go higher. And let's take a look at how often does Run pay dividends. They have no dividends whatsoever, so it's basically a waste of our time to take a look at it. So Run is going to be a no. All right, what's next? BBC. What do I think about Uber? Pedro Del. Okay, Pedro Del. Uber has not been around for 20 years yet, so that's going to be a no. OQ, BBC. No, it's a monthly. It doesn't work. What about DJT? Again, not over 20 years. ARR, we already looked at that. Do you have a YouTube account? Yes, I have 2 of them, Brian. I already showed you both of them. ARR, we already looked at that. Also look at QCOM. Options look juicy. QCOM is on our list. Okay. Do you have 4 times a year dividends, blah, 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 maximum? Okay, I already looked at that one. Webull matches 3.5%. Sorry, concern of retirement, also reduced tax burden. All right, guidance. That sounds like a good idea. 3.5% matches. That's not bad. What's the minimum you should have to start with? That's going to be different for everyone. Okay, there's 108 people here. I'm pretty sure we all have. If we took a look at everyone's account, I'm pretty sure there's probably a 99.999% positive that no people have the exact same amount. Because we're all different. We all have different goals. We all have different dreams. We all have different, we all have different risk factor parameters. Ooh, that's a good one. And we all have a different time frame as when we plan on retiring. That's a huge one. Okay, I retired in November. What I have suits my fancy perfectly fine. I make 1% off my little nest egg, and that works for me. All right. Now, you may have a different need than I have, and you may need more money than I do. You may need to work longer than I do in order to get your goal. All right. But dude, that's a monthly solid no. Thank you. Typo. ARR is a no. Alrighty. ARR. PPL is no. Okay, got that one. Or reader rather. Good evening. We're almost done. What kinds of companies would those be, for example? Companies would those be, for example? Ooh, this is my favorite part. Seriously, it is. All right, I'm just going to read you a little bit. Kinder Morgan, Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo, Emerson, Hershey's, RTX, Starbucks, Walmart, ExxonMobil, Kroger, Clorox, U.S. Steel, PPG, ConocoPhillips, Apple, Chevron, UPS, ADM, Archer Daniels, Aflac, Target, Wells Fargo, WBA, Walgreens, 3M, Johnson & Johnson, KeyBank, Baxter, eBay, Corning, Heinz Ketchup, Nucor, and Whirlpool. That's just this month on one list. Okay, I got like 5 or 6 lists. Let's read my list that I got. Well, I have a list of companies that are 100 years old. I have a list of dividend aristocrats, dividend champions, dividend contenders, dividend kings. My old list, which is what I've been working on for like 20 years. And then I have Warren Buffett's list. I have weekly optional list. I have weekly ETFs. I have a whole bunch of lists that I look at. Now I will look at them and find out what is best. And I base it always base it on the calendar. Okay? I like jumping in on a Monday and being out on a Friday. So the prerequisites that I require are consistent increasing in their dividends and weekly options. So out of the 9,600 different companies in the stock market, there's only about 300 that actually fit those parameters. And once you take 300 stocks and put them into a calendar, well, each quarter, which is January, February, March, quarter 1, April, May, June, quarter 2, July, August, September, quarter 3, October, November, December, quarter 4. 4 quarters in the year. Each quarter has 13 weeks, okay, or 66 trading days. So if you take 300 stocks and compress them into a 66 trading day, because each quarter has 66 trading days, all right? So 66 trading days, 300 companies, you're going to look at anywhere between 5 to 20 companies every single week for consideration. So this week here, 3M, Johnson & Johnson, KeyBank, Baxter, eBay, Corning, Heinz Ketchup, Nucor, or Whirlpool. If I can't find 1 or 2 companies here, I have some serious issues. Okay, I like every single one of those. I like 3M. I like Johnson & Johnson. I like Baxter. I like Heinz Ketchup. I like them all. So how do I decide which one? Well, it all depends on what, let's get out of that one. It all depends on what am I buying it for? What's the closest strike price for a covered call? What is that paying? Is it over 1%? Great. That's only half the equation. The other half of the equation is where's the high of the year? Where's the low of the year? Where is the stock moving to? And what is the last 30 days looking like? Well, because the last 30 days are going to give me some kind of indication of where it's going next. Okay, 30 days. Hold on. Let's actually get to 30 days. Here we go. 30 days. Okay, went up, it came down. Here's the 30-day bottom. From the 30-day bottom, she shoots up to the 30-day high. You got people like me, and there's a bunch of people here in the audience, and you see a profit like this from $14.50 to $18. $14.50, that's $4. That's $3.50. $3.50 on a $14 stock is over 20%. So over 20% jump, well, yeah, there's going to be profit taking, and there was. So here we are now. Now this right here, this could be a bottom, and this could be a 1 day to the upside. Okay, Monday would be 2 days to the upside. Maybe, if it is, that's a perfect opportunity for me to jump in. Now, I want to take a look. Well, Macy's been in business for over 100 years. Check. We know what the high is, we know what the low is. Check. We know what we're paying for it. Check. We know what the strike price is. Check. We know what the premium is. Check. It's close to 2%. Would I buy Macy's, a 100-year-old company that has name recognition that you cannot buy for any amount of money? Well, hell yeah. As a matter of fact, Macy's has had several offers this year for buyout, and they've said no to a bunch of them. All right, so anyway, that's that. We are past 11:30. Now, tomorrow is Friday. Let me breeze through the last of these questions, and we're going to call it a day. That's a cute daughter. She's still trading. Believe it or not, my daughter's not trading anymore. Thank you, James. Have a great evening. You're welcome. What do you think about SOXL? That's a no. That much I do know. All right, Marathon. Katie, it's a little late for that, but we'll write it down for tomorrow. Okay, we'll look at that one for tomorrow. NVDL is going to be a no. What companies do you have for next week? What companies do you have for next week? He is not going to say. That's part of the morning class. Thanks, Redneck. Yeah, he's absolutely right. You know, you have people that are serious. Yeah, I've learned something over all my years. Those that pay attention. If I give you something for free, you're not going to value it. Terribly sorry. It just is what it is. It's human nature. If I tell you what's going to go up tomorrow morning, you may or may not do it. But if you pay for that information, well, now it has more relevance to you. And it's as simple as that. Those that pay attention. Those who pay more attention. Okay, it is the level of interest in which you have at the moment that's going to decide what the value is to that information. All right, all that being said, it's 11:30. You guys have a great night. I'll see you again tomorrow, because the sun will come out tomorrow. Wipe away the cobwebs and the sorrow till there's none. Just thinking about